A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Hello, everyone. Welcome back to the Trading Room. I'm Shain Vernier, and this is the TPO Workshop. Today, we're going to look at the time price offering trading strategy by popular demand. We got several inquiries over the past several weeks ago. Shain, we're watching you knock out the TPO chart seemingly every day. We want to know how to trade it, so we want a full tutorial and a workshop on it. So I'm going to go ahead and provide the best of my knowledge how to trade the TPO chart. Now, we've got a lot of resources here. We've got a way to add it to our TradingView platform. I'm also going to dive into MT5 and show you how you can find TPO and MT5. However, I do not vouch for any expert advisor. I'm not trying to sell you anything here today. I just want to get you up and running with a pretty darn good strategy for flat markets. Now, the markets trend about 30% of the time. That leaves the other 70% for the good traders, the veteran traders, the professional traders to figure out what the heck to do with price action and attempt to make their daily, weekly, and monthly nuts. That's what this is all about. This is about making money. This has to do with nothing else. And the time price offering charts over the past several years, well, a lot longer than that, but over the course of my career, Market Profile has been sort of my go-to in the summer months when things get really slow. So to answer your question, this is one of the strategies that I trade. I like it. I really like it. I think that our performance over the past, 3 weeks of showing you the TPO charts and really incorporating those trades into our sort of our portfolio really do show you the power of this trading strategy. It's been a lot of fun executing those trades live, and today we're going to look to execute a few more if we can find them. So I want to welcome everybody back to the Trading Room. Good to see you out there in YouTube land, morning, noon, night, wherever you may be in the world. I'm glad that this stream is finding you. Tuku, good to see you over in the How to Trade community. Bobby, Bob, always a pleasure. Bobby and Jeanette. Hi, Shain. Hi, Jeanette. I'm confident you're doing well. I'm confident everybody in here is having a good trading day. It's a big day. We're not going to cover any news. I will tell you this, though. NVIDIA earnings are out today after market. Be ready. This is a 5-star economic event. Could drive the NASDAQ every which way but loose. We had a NASDAQ trade idea yesterday that's in the green by about 200 points right now, 150 points. Really nice trade and a good one to be carrying into the NVIDIA release. We will go ahead and recap that trade and how it pans out tomorrow. But I got to tell you, we don't get confident often. No, we get confident pretty much every time we pull the trigger on a trade. But that dip, buying the dip in the NASDAQ yesterday happened during the overnight. It was a fantastic trade. It's been absolutely brilliant. We will recap that tomorrow after we get the final verdict. NVIDIA. That's the word of the day. I heard Jim Cramer say it all morning long, NVIDIA. All right, so I'm going to go ahead and get on with the strategy because this is what everybody tuned in for, was the workshop, the TPO price action workshop, and I really just want to dig in to some of the fundamentals here. I'm going to tell you exactly what TPO is. I'm going to show you how to add it to your TradingView chart and also your MT5, and then we're going to dive in and execute some trades. We're having a pretty good trading week. I don't know the final tally of what we're up. I think we're up $500, $600, $700, something like that. I don't like looking at the tote board during the week. I really don't. I just know I like to know where I'm at, and if I'm up, I trade a certain way. If I'm even, I trade a certain way, and when I'm down, I trade a certain way. And we'll dive into that psychology as the week progresses. But today, very good trading day, very flat, perfect for TPO. So I'm going to dive into exactly what that is. But first, let's go ahead and add this to our platforms. I want everybody that has the platform TradingView to be able to really watch what I'm doing here and add the indicator to your platform. Now, it is more of an advanced technical tool, so you may have to upgrade to a paid version of TradingView. I'll leave that completely up to you. But if you are working with this type of a platform, TPO, time price opportunity. You just go ahead and give that a click. You add it to your charts. And what this does is it gives you that graphical representation, that sort of a, well, I'm going to get into what exactly it is here in a second, but that does give you the indicator, and it gives you the 3 points that we have to know. We got to know the upper end of value, the lower end of value, and our point of control. That's the key for what we're going to do today. And I'll get into some of the nuance of how to read this thing here in just a second. Switch markets, unfortunately, it's a little bit different. There is no sort of local, I would say there is no local TPO indicator that you can access for free on your MT5. So you're going to have to look towards a third party. And by doing that, you just click that market button down there in your bottom right on your bottom price bar. You can't really see it, but you see my cursor. It's right down in there. It says market sort of on that bottom toolbar. Maybe I can bring this up just a little bit. See if that, nope, it doesn't move. Okay. In any case, you're going to go ahead and click on market. That's going to take you to the MQL5 platform here, and you're going to go ahead and figure out what to buy. One thing I will say, you will notice that they want some money for these. They want some money for these, right? Some of these are interesting. What you're going to do is you're going to go right up here. You're going to type TPO in, and it's going to bring you up the actual indicator. I don't vouch for any of these. I'm not going to tell you which one to buy. I will tell you that they range from, $375 or almost $2,000 to maybe something just real basic for $99 or $37. So that is up to you. I'm not going to vouch for any of them. It is harder to do on your MT5 platform. There's no question about it. Remember, we have Pine Connector. We have something called Pine Connector, and that is a fantastic, what I would say is it's a great feature, and it's free for all Switch Markets clients, and you can go ahead and connect your TradingView platform to your MT5 platform. So you may not even need to really buy one of these EAs here, and I don't vouch for any of them, okay? I want to be very clear. I cannot say that enough. I don't know these people. I don't know what they were buying, I don't know what they built. I just know that when it comes to TPO, we've got to have some basic functionality. It has to show us volume at different price points. All right, that being said, let's get on with it. Okay, so what you've got here is you've got basically a chart. And I'm going to run through some slides here in a second, and I'm going to tell you exactly what it is. Think of before we go any further, do not get confused. Do not get confused by the letters. Do not get confused of this profile. What this is this is volume turned on its side. Now, you'll see at the bottom of my chart, I have volume according to time. That's typically how we think of volume, right? This is volume according to price points. That's it. Now, each one of these letters represents a 30-minute block of time. I highly recommend the 30-minute time frame for your time price offering or market profile. I think that if you go any lower than 30 minutes, you're going to run into trouble. 30 minutes is what I sort of cut my teeth on, and 30 minutes is what I learned on. And most market professionals are looking at the 30-minute blocks of time during the U.S. session to trade the things that we're going to trade today. Now, before we go any further, I do recommend Market Profile for futures. You can trade them. You can trade it using future CFDs. Those are all available on Switch Markets. You can trade everything I'm going to show you today via future CFDs on futures over on the MT5 Switch Markets platform. You can trade it all. Now, the big thing that you got to remember, though, is when we talk about OTC markets and we talk about Forex and spot gold and some of the things that everybody trades here, CFDs, the volumes aren't necessarily accurate. Now, they may be ballpark. We can use tick volumes. It's not quite the same as an exact contract that has changed hands. I like exchange-based contracts. I like exchange-based futures because I know exactly how many contracts have changed hands at a given price point. That is the crux of market profiles, understanding where the price is and where the volume is according to that price. Very, very important that we understand that. All right, we're going to dive into the crux of TPO. I'm going to define it for you now and tell you exactly what it's for. We're all set up on our MT5s and also our TradingView. We're going to use TradingView because it's easier to see today and it's easier for me to work with. We're going to do that. I'm going to start off, though, before we get into these concepts. This right here is what I had to learn. This was my first job. Shain, before I teach you how to trade, this is my uncle Gary Vernier, was Shell Oil executive. He ended up trading front office for Shell, set up the crude oil trading desk for Shell Oil back in the late 80s, ended up trading for Northville Oil, a firm called Northville, ran research projects, ran huge trading books, and at one time was trading about 15% of the world's oil derivatives. So it was definitely a heavy hitter, and this is what he says, market profile. Market profile is a concept that goes back to the CME group. It goes back to the floor on the CME with a gentleman called Stadelmeyer. Stadelmeyer came up with a concept of time price offering, essentially a market profile type of a dynamic. Which price points we're trading with the most volume? Build your trading ideas according to that. This was my binder, and it was real simple. Look at all this stuff. I mean, absolutely look at all of it. I mean, we're talking about 500-600 pages of stuff. You can see the diagrams. I've still got my old notes in there. You can see the diagrams and everything. The beauty of this and the tutorial I'm going to give you is that you don't have to read all this. I'm going to show you exactly how to trade it. I mean, look at these numbers. Minus development versus the control price, point of control, all of this stuff. You'll see I talk about gaps a lot. You can't really see it there. Maybe there. Seeing how a gap forms, seeing how a normal distribution forms. I had to do all this. And this was after I got my degree in finance, my bachelor's of science in finance from the University of Montana. Some of these charts, check these charts out. Check that stuff out. We're going to keep it a hell of a lot easier than that. You want to know why? because we're not economists. We're not writing books. We're not writing trading strategies. We're not trying to get somebody to believe our theory or whatever you want to call it. We're not trying to get somebody to buy a program from us. What we're trying to do is make money for ourselves. I want to be very, very clear about that. Make money for yourself. All of that's fancy. And if you want to review Stadelmeyer's work, you can download this online. This is called Reading the Market Profile Graphic, Chicago Board of Trade. That's available on the CBOT. Go to CBOT, Google CBOT and Stadelmeyer. That will be downloadable somewhere on the internet. And you will be able to peruse those 600 pages or whatever it was. 380 something pages. You don't need to do that. And I'm going to show you why you don't need to do that right now today. Okay, let's dive into the TPO. The first thing I typically find myself doing more and more is just throwing something into Google and getting the AI overview. So this is the basic AI overview of TPO, and then I'm going to tell you really what it is. Time price opportunity trading, also known as market profile, is a technical analysis method that maps how long a market spends at trading a specific price levels over a given time session. Instead of tracking standard time on the x-axis, TPO charts use sequential letters to show price distribution. That's from Optimus Futures. Are they right? I mean, that's part of it. A lot of people want to believe that. It's not correct. Sure, these little blocks they do have a letter assigned, and they go A through Z on a given trading day, right? A through Z. We typically are trading well, that's not necessarily true, but they do run essentially A through Z, and they go lowercase and uppercase, and what happens is each one of these blocks delineates a 30-minute block of time. That's not really what what market profile is, though. Market profile at its core is volume on its side. All right? It is volume running vertically as opposed to horizontally. 95% of you think of volume in terms of your horizontal distribution, meaning you look for your volume spike. Okay, I've got right there. I've got the 6:30 a.m. my time. I've got 8:30 a.m. Eastern. There's a volume spike. Okay, during that 30-minute period, we had a bunch of volume come into the market. Now, the reason why you think about that is because many of you are momentum traders and you're trend traders or you're breakout traders, and you're trying to figure out which way price is going to move directionally. And you're not wrong, because at any given time in the market, we have a few decisions to make. We can buy, and if price goes up, we win. We can sell. If price goes down, we win. Okay, that's it. So we do think of price on a vertical concept. It is a vertical construct. It either goes up and helps our longs, or it goes down and helps our shorts. It's that simple. The TPO charts are different than that. Market profile is different than that in that it shows you the volume at each price point. It's a lot more useful when it comes to volume. I want to know right here, what is the most commonly traded price point today for the gold market, gold futures? It's right in there, 46.77. So think about this in your mind's eye. If we know a ton of volume has changed hands, right up there, right around 46.75-ish, somewhere in that neighborhood, is that going to be an area potentially of support or resistance? Or is that going to be an area of consolidation? What is it? We're going to get into that in a minute. But the big thing you got to remember is by understanding that volume is distributed on a vertical basis here according to price point as opposed to time, that is the big delineation. That is the big difference between normal traders that are trading chart patterns out there and those that are trading market profile. I won't say a majority of the professionals out there, but I will say a great percentage of the futures traders, professional futures traders out there, they are looking at market profile in one fashion or another. So we've introduced this into sort of the concepts of how to trade and switch markets, not necessarily because I want to sell this as a program or say, hey, look how great we trade the TPO. I want you to understand that there's a lot of different ways to think about things. We always make the time volume correlation. And we do that because we're retail traders and we're trying to time the market and figure out whether the momentum is to the up or the down or whether there's any momentum at all. We do that by seeing how much action comes across the board in a given period of time. That's simple. What's more important than that is how much action is coming across on an individual price point. That, or a little area, an area of price points, that is a lot more important to us and a lot more valuable. So I disagree completely with Optimus Futures. I don't believe at all what they said right there. And take that. All right, so this is how to trade market profile with TradingView TPO charts. Basically, what we're talking about is breaking down the auction. Where is the action in the auction? Say that 3 times. But that's what we're looking for. Every time you go into the markets, it's an open auction. It's an auction. You're buying, they're selling. You're selling, they're buying. That's an auction. We're trying to figure out what something is worth, essentially. The TPO chart gives us a good denomination of a good concept or a representation of where the action is within that auction. Every day is an auction, guys. Every single day is an auction, and we have to find out where the buyers and the sellers are before we can make our decisions, right? What a TPO chart actually shows, market profile is not a signal by itself. It is a map of where the market spent time, where it accepted price, and where it moved too fast to build value. Essentially, we're going to walk through a few charts. The rows are price levels, set the row to auto first. You don't have to follow this. 30-minute time frame is absolutely huge. Absolutely huge. Don't worry about setting your row. Just use the defaults. That's width. You don't have to worry about that. Just use the defaults. Value area 70%. Okay, we're going to get to value area in just a second. TPO counts time at price. Volume profile counts volume at price. Use both when the levels agree. I don't know if I agree with that, but let's go ahead and take a look. Read the structure before you trade. Now, this is absolutely critical, and you have to understand these concepts before you can trade TPO. The POC, the point of control, the highest time concentration, the session's gravity point. What could you also say it is? It's where a majority of the action is. Don't worry, don't get confused with time and price points and all that. It's where the action is. The POC, right here. You've got the POC as the white line in the sand. U.S. session right there for gold. The POC is right around, 46.77, somewhere in that zone, 46.78, right there. Now, we can certainly blow this up and get it exact, but remember, exact, horseshoes and hand grenades, something like that. We're not going to play that precisely, especially in rotational conditions. 46.77.7 essentially is going to be your POC, your point of control. That's the first part we have to understand. That's big. Point of control is the gravity point. That's a great way to describe it. What could it be? If you're above price, theoretically, it could be support. If you're below price, theoretically, it could be resistance. However, I wouldn't think about it as support and resistance unless it lined up with maybe a moving average or a Fibonacci level. What you think about the point of control is it's an area of action. That means there's buyers there. That means there's sellers there. What do you think price action is going to be like in that area? It's probably going to be a little choppy. It's probably going to be a little dirty. However, the vibrations are going to go both north and south, and that's all we need is just to find a contested battleground. That is the POC. That is the point of control. All right, the VAH and the VAL, the value area high and low. Essentially, when I go with the VAH, I call it value, top of value. Value area low, the VAL is going to be your value area low. That's going to be the bottom of value. I call it the value low. Now, what that is essentially is the value area is going to encapsulate about 70% or more, depending on how you set your profile. Leave it at 70%. That's fine for what we want to do. That's going to be where 70% of the action is. That's the most hotly contested range. POC is a price point. Value area is a range. Initial balance. Early session range. Breaks show in initiative activity. What that is, and you see that a lot, especially when we're trading our futures contracts, our equity index futures, is you see a POC. See that? Essentially, that's going to be your initial balance from the overnight. So when let's go right over here to maybe our E-mini S&P 500. You can see, okay, this is beautiful right now. Did we miss a trade? Yeah, probably. POC right there. That's your point of control, right? It's also your point of control for the U.S. session. I would call that your initial balance. Now, we're going to get into patterns here in just a second, but this is almost a perfect bell curve. Almost a perfect bell curve for today's E-mini S&P 500 trades. What does that mean? It means that thing's flat as a pancake. I mean, it's flat. What would our trades be going into the late session? We'll cover those in a second. 2 of them jump off the page at me right now, but we'll get to it. POC, you're going to see this coming into the U.S. session. Here's a good example. You got another POC developing here, a little bit higher than your point of control right here for WTI crude oil. That's going to be your initial balance. That's what you're coming into the session with. And then this is how life really started to develop during those periods of high volume. Think of the initial balance as your initial POC. Early session range. Breaks show initiative activity. So if you break big, like from, say, your initial balance, I don't work much with initial balance. I really don't. But you can see right now, everything is lining up for your equities indices. Your initial balance is there. Your POC is there. It's all within the same basic range. Look at this NASDAQ chart. Absolutely beautiful rotation. What happened? You sell the top of value, no question. We're not there yet. That's kind of upsets me because we've got the same type of trade potentially setting up here. Let's go to the E-mini Dow. E-mini Dow futures is a lot different now, isn't it? There's your initial balance. There's your POC. Here's your value area, and you're way down the queue. You're outside of value right now. We can start talking about strategies to play on a rotational day, play back into value. That would be more of a day trade. We'll talk about that in a little bit. So we did want to outline this and be crystal clear on this. Now, there's also something on here, single prints, poor highs and poor lows. Basically, what you're looking at here is just your fat tail. It's called a fat tail or a tail risk I don't want to get too far into statistics because I'm not a statistical guy. I'm really not. I'm not a genius in that respect. That was probably one of my weaker areas in college was being a statistician. I didn't really understand much of it, but I do know tail risk and fat tail risk. It means that those are sort of your low probability areas. So when you're looking at a TPO chart, you'd say, okay, this out here, we didn't trade this very much at all. Now a lot of folks view that as being your liquidity sweep. If you're a trader that works with smart money concepts, they would say, okay, that's the liquidity sweep. Price wasn't there. Boom, sellers won big. There were no bidders. Okay, I can buy that for $1. Should we be making our trading decisions based on single prints, poor highs and lows? I don't think so. I like to do it the other way. I like to figure out where the volume is and then go from there. All right, so there's all sorts of different things you can look at here, shape-wise, trend imbalances. For me, all of this is just highly interpretive. Balance and imbalance doesn't really mean much to me. Balance, this would be balance. You're balanced down here at the POC. You're balanced inside of value. That means if you're trading inside of the value area, you are in a state of balance. I don't like it because it's not fine enough for me. That's one of the big things with the smart money concept traders and the SMC guys that I really have a problem with. When they start talking about balance and imbalance, I feel like those words don't mean anything. I really do. To me, an imbalance, clearly, I mean, everybody can see it. An imbalance would be right up here at the top of the range. Okay, the sellers won. No kidding. No kidding. We could tell that by our price bars. We don't need anything else to tell us that. Okay, there was more sellers. Okay, that's a level of imbalance. Well, maybe it is. Maybe it isn't. If we trade back up here, it could turn into an area of balance really quick in the last 2.5 hours of the session. So I'm not going to be too fixated on the terms balance and imbalance. I do not like them. And, well, it's my workshop, so it's my party. It's my party, and I'll dance if I want to. Personally, I don't like balance, imbalance, but if you guys do, you like that nomenclature, that verbiage, go with it. That's cool with me. Remember, there's only a couple rules on this live stream. There really are. If I don't know, I'm not going to BS you. And if it makes money, it's the right answer. And ask questions. It's cheaper than losing money. I've already lost the money, right? Over the years, 15 years. I've already taken the losses, man. Ask the questions. That's a lot more, lot cheaper than just getting in there and losing money. All right, so that essentially is our key. Those are our core references, and you have to understand those. If you don't understand those, you're doomed. All right, there's all sorts of things here. We've got trading setups, 4 TPO setups. We've got the map yesterday. You mark your POC, your VAH, watch the open, wait for behavior, execute and manage. What we're going to focus on right here is number 3, wait for behavior. Now, the reason why we're going to do that is because, number one, it would take me probably the next 6 hours to break down all 4 of these approaches, all 4 of these setups. I will touch briefly on them and give you examples. Map yesterday, mark the POC, the VAH, and the VAL. So a strategy of this nature, when you look at the previous day's market profiles, just to sort of blow it up for you. And there's a lot of this in Stedelmeyer. Stedelmeyer was really focused on the dailies. He loved the daily price action. And his basic concept was, listen, I'm trying to find areas with real thin chains where we can play trades back up to previous POCs and value areas. That's it. So take a good look at this NASDAQ chart, this E-mini NASDAQ chart. What do you have here? Okay, you've got a value area here, very tight, and that was back, on the 20th of August. Okay, great. You got another value area here. You got another value area here. You got a real tight value area here, and now we're starting to develop. What could we say potentially about a previous day strategy? 5, 4, 3, 2, 1. You can look at the POCs as either being targets, value areas being targets, or you could also look at them as support and resistance. So right now, I can almost guarantee you that somebody out there is looking at yesterday's point of control saying, okay, this is a resistance zone. I can almost tell you that. Will it work? Personally, I don't like it. I really don't. Unless we've got a gap formation, something like this, where you have a major move, right? We've got a major move. We've got rising POCs. Then potentially we could shoot for a long and maybe look to take a swing trade back up in to this really thin chain or almost a gap area. That's one way to look at the map yesterday's situation. To me, it gets really convoluted. And as a retail trader, I think you need to have a lot of money to be taking those swing trades and make it happen. Number 2 is watch the open. We can play the open just with respect to yesterday's levels. Essentially, that's what it is. The overnight levels. So what you would do right here, you'd be looking at your overnight POC or your initial balance and your initial value area here for the NASDAQ, what developed during the London session. And then you could either play a breakout out of that or a return potentially to those value areas. Typically, you're going to play a breakout from it, just because value, more than likely you're going to be trading inside of value on the U.S. Open. But you could definitely be playing a break right there, opening bell, ding, ding. If you did see the value areas developed going into that trade, more than likely you could have played a breakout to the top side. That's more of a breakout trade. Number 3 is wait for behavior. That's exactly what we've done. We've basically watched the entirety of the U.S. morning right now. We've watched volume setup. We know exactly where these levels are going to be. We know the value area. We know the POC. We've got pretty much a concrete look at where the volume is in the U.S. markets for about the past, coming into this stream, it was about the past 3.5 hours. It'll be 4 hours and 5 minutes. And then last is execute and manage. Stop beyond reference, target next level. We're going to scalp it. We're going to scalp it. All right, guys. I know there's a lot of questions. Essentially, that is a look at the TPO stuff and how exactly you can look to do it. You don't need any of this. Trading view execution checklist. You don't need any of this. Entry, invalidation, targets, filter. A lot of these are just fancy words. Fancy words. One last thing. TPO does not predict the future. It tells you where the auction is, doing business, and where the next reaction should matter. It just tells you where the volume is. Volume is very important, not just according to time, but according to price point. Very, very critical. Okay, I got a couple of questions, and then we're going to dive in. I want to start trading this right now because the best way to show you how to trade the TPO is to trade it. And we've been doing a lot of this lately. What did we start with a couple weeks back? We started with 10,000, and we are at 13.4, so we're up about 3,400. That's nice. That's nice. We've had a decent week this week as well. Last week was a pretty good-sized week, so I feel pretty good about all of it. A couple of questions. Actually, let's get right out. Let me set this trade up, and then we'll go ahead and I'll field the questions. So today's Thursday. I didn't cover any of my own psychology for this. Thursday is a big trade day for me. We're going to go ahead and look at the E-mini S&P 500. I'm going to break down this TPO trade for you. We're going to get our orders in the queue, and then we're going to execute it if it comes our way, if we're fortunate enough, right? E-mini S&P 500. 2 lots today. I'm a high-risk guy on Wednesday, Tuesday, Wednesday, Thursday. We trade money. We play for keeps. We play for a decent P&L. 2 contracts on the E-mini S&P 500 is going to be about $25 a tick. Significant. All right. So what we're going to do right here, let's break this down. We just covered exactly what the market profile looks like for equities. Essentially, that's a bell curve. What is that? Your Gaussian distribution. It's just turned on its side. Point of control's down here. We've broken above the point of control. 70% of our value has traded inside of about 76.9250 and 76.81. That's the VAH, the value area high, value low. We've traded inside of there. What do I want to do right now? It's a rotational day, flat as a pancake. I want to sell, sell, sell. Why do I want to sell? Because I want to get a shot at the top of value. That's where we want to do business up there. That is exactly where I want to be. Limit, sell. Top of value. Right in this zone. I want to shade it about a tick somewhere in there. Let's go ahead and put that trade down. Okay. Now, it's not quite as accurate as we need it to be. We need to really try to be relatively accurate. I'm going to show you sort of a pro tip on how to make sure that you get your best opportunity of getting filled if price goes in our direction. I always like to shade my entry. So right now we've got 76.9250. That is the top of value. Value top of value. What should my entry be? Well, right now I've got 76.9225, so I'm shading that a tick to the downside. Let's go a little bit further. Let's shade it 2 ticks, right around 92. Now, this really isn't the top of value. This is just ahead of the top of value, but I'm aggressive. I want to get in this trade, and I don't want to miss it by just a tick or two if price goes here and then falls back down because it can't break out of value. Now, that's an old habit with me. That's my personality. I'm aggressive like that. Okay, there's our trade. Take profit. What should we be looking for? I want a nice gain on this. It's Wednesday. It's time for us to make some money. Let's shoot for something like that. Let's shoot for about 2 points, 2.25 points. How about my stop loss? Now, here's where a lot of people do things a lot different than I do. And I've been accused of, you don't have a stop loss. You just let these things twist until they go in your favor. Go back and watch our performance. Go back and watch our trade execution. The best trade we made all week was getting out of the gold trade very early. I read price action. You can too. It's just going to take you some time to do it. How do I read price action? 1 minute chart. This is where things start getting a little more complicated, and this is what separates the winners from the losers. Being able to manage your money, understanding price action, and how to stay out of the way of a big loss. Now, full disclosure, on any given trade, we could see a sweep higher. The institutions could blow it up in our face, and we could be in big trouble. Happened to me last summer about this time. Got hit bad with gold, lost about $3,200 in about 4,500, about 45 minutes. Institutions, Trump said something, institutions came in, swept gold higher. About this time of day, too. It was late in the day. Low liquidity, block order, took a big loss. Couldn't really help it either. A few things we can do to manage that risk. Number one, make sure there's no news events out. To the best of my knowledge, there's no news events coming out right now. Number two is to understand price action. What are we thinking right now? We're selling the top of value. This could be a dirty trade. We're going to have to give this a few minutes to develop, more than likely. However, after 1 or 2 minutes, more than likely we're going to either have a swing high to deal with, or we're going to see the market actually trend above our entry point. If it trends above our entry point, we've got to get out. No question. You've got to get out. So how will I know that? Well, remember our shade. We shaded 2 ticks to the downside. Truly, the top of our value is right there. That's the top of value. TPO, top of value is right there. So I know the price needs to hit this up here and start to retrace relatively quickly, or else I've got a problem. And if I've got a problem, I've got a DD. So you can see price sort of milling around here. That's the kind of price action we want. In a perfect world, you want to see a nice bullish break, and then you want to see your entry, and then you want to see it go down and get your price. In a rotational market, probably the biggest challenge for us is going to be getting filled right up there where we need to get filled. But that is the trade. That's the TPO trade. So let's go ahead and just turn it back to our 30-minute chart so we can just watch price action as it really pertains to our chart. Okay, guys, I got way behind on the live chat. My apologies. AJ, good to see you, AJ. Welcome. Buy or sell. I know that message is about 25 minutes old, so I doubt you're still there. But buy or sell what? I don't know yet. Right now we're selling S&Ps. Packham, sup, Shane. Sorry I'm late. You mean you did an economics major? Once again, I mean, a 10-minute-old. Sorry, guys. I got way behind. I got sort of enthralled with the charts. Yeah. Well, no, I wasn't an econ major. I was a finance major. I have a bachelor, University of Montana, class of 2002, bachelor's of science in business finance. That's what I got. Didn't really teach me anything about trading. As a matter of fact, the professors all thought trading couldn't be done. They didn't believe that you could trade successfully. Sort of showed them. Let's see. Sharbri, good to see you, Sharbri. Welcome. If it didn't work for you, no need to call it garbage. It works for others, even the simplest stuff, just as long as someone's making money. That's it. I agree completely, Shar. 100%. For me, the Optimus Futures stuff, the way that they do business on that basic definition the AI gave us isn't correct. As far as delineating, suggesting that the volume on a TPO chart is relative and dependent on time sort of misses the whole point. That's why I don't even really like the name TPO, time price offering. I don't even like that because it suggests that time is the key element here. And yes, it is the blocks. I mean, the blocks that we're looking at are, they got a little letter in there, and that's supposed to be a different time period. But what's important here is the amount of volume that we're trading around those price points.
In one way or another, guys, it comes down to where are the buyers and sellers at. That's all that matters. That's why people spend their lives breaking down candlestick patterns. And that's why, a lot of folks are hyper-focused on time when they're trading crossovers and things, because they're trying to get in on that momentum. They're trying to figure out what exactly is going on with regards to volume, the volume-time relationship. I like the volume-price relationship. And, of course, we have to equate it to time in some fashion, but time is not the leading factor here. It just isn't. It's essentially the prices and the volumes. That's the way I think of TPO. Could be wrong. But like you said, Sharp, if it doesn't work for you, great. It may work for someone else. And if it does work for someone else, then that's what it's all about. It's making money. Guys, I don't care how you trade this. Just make money doing it. Turn this upside down and make it vertical, or put the volume data up here and skew your prices here. Do whatever you got to do. Start thinking of price in a different fashion, whatever. It's just about making money. That's all it is. All right, so we do got it. Looks like we got a live one right here. We're selling 76.92s in the E-mini S&P 500. We are going to have a little more patience with this trade. You'll notice that yesterday we really did jump ship on that gold trade fast. And it was a great thing that we did because we preserved our daily gains. Number one, we preserved our daily gains. And number two, we stayed out of what could have been a catastrophic loss. This is different. This isn't a thin gold market. This is a very thick, deep E-mini S&P 500 market that is in flat rotation. In my view, if we get filled up here at the top of value, we have a very high probability of trading positive. Now, where am I going to take my profits? I want to take them down there right around 76.89, somewhere in there, 76.89, 75, and we should be able to do that. If it goes in the next 25 minutes, we should be able to do that. However, if the market does blow in our favor, 200, 175, I'm probably going to be taking a look at the money because I don't want to give back what we made, especially if it's easy. So that's something a lot of traders miss is they say, well, it went in my favor and it's just a matter of time before it goes down there again. Not necessarily. Not necessarily. I mean, we need to be really smart about what we do here, and I do think that we have an opportunity here maybe to pick this trade off and put a few green pips in the shed. So let's just go ahead and wait and see. Right now, we sort of are in the vicinity of our entry. You can see it on our trading dome. Let's go ahead and take this down to, say, a 1-minute chart. Okay, this is very nice. I mean, this type of market structure, look at this 1-minute market structure. Rally, pullback, flatline, rally, pullback, rally, pullback, flatline, rally, pullback. I mean, that's exactly what we're looking for, a staircase. Exactly. It's indicative of a rotational market, really speaks to the fractal nature of markets when you start to see all of this really tough price action that's developing within the context of the E-mini S&Ps, the S&P 500 being basically at scratch for the day. This would be an incredibly strong time to be taking a value area high sell. Conversely, we would love to buy the value area low too as well. We just probably aren't going to get that opportunity during this live stream. But this is our trade. Now, the one thing that I do have to show you how to do is the stop losses, and that's going to be dynamic. Initially going in, we're going to watch price action. I don't have an exact level where I want to get out. We do know that it's got to work, though. We can never trade really beneath a 1-to-1. A 1-to-1 ratio is pretty much, once our trade's set up, it needs to be at least that. But initially, if this market blows in our favor and doesn't take a draw, take the money. There's nothing wrong with ringing the cash register. Nothing at all. Riding Height, good to see you. Riding, welcome. It appears that you only use the volume profile for the current session and not TPO or previous day's session. Why not just use the VRVP or another volume profile indicator instead? Declutter the charts. It's a good point. It's a good point, Riding. And that's because I'm more comfortable with the TPO graphical representation. If the clutter bothers you, go ahead. To me, though, and it really is an astute, savvy question. Why not use something else that'll declutter the chart? Because I know immediately what I'm looking at. Realistically, the shape means a lot to me. The shape means a lot to me. So that right there, I look at that graphical representation and say, okay, that's a normal distribution. That means we've got a rotational day. I'm looking to play value back to the center, the POC. We could scalp the POC, but I'm not really too interested in it. Whereas in other things, let's go to our gold market. Gold market's completely different. Completely different formation today. Okay, the first thing I would say is it's broad. It's more of a broad. It's not a real sharp sort of Gaussian distribution or a bell curve, right? What is it? Well, you've actually had a bit of a move. You're down almost 1%, right? So if you're down almost 1%, you're trading beneath value. What would I be looking to trade with this formation? I can see it automatically by the distribution and the shape that shows up. What would I be looking to do here? If I got a chance, love to sell the POC. Love it. POC sort of with the downward pressure, that would be great. What are we going to do at the bottom of value here? Value area low with gold. Nothing. Nothing. Value area high, you're not getting there today during this session. Right there, though, yeah, we'd take that sell. How about Fibonacci's? I know immediately the market has sort of moved down. Let's go ahead and take a look at our U.S. session right there, 8:30 a.m. Eastern. That's about when really the guts, that's when your big-time volumes really start coming consistently into the gold market, sort of the guts of that London-U.S. overlap right in there. What could I be doing now? Well, it's not a trend, but it's definitely the pressure's down. I could be looking to sell with the price action. When the market's really trending, then you can definitely get in on those trades. And the reason why I would leave this on my chart is because I can see it immediately and recognize it. WTI crude oil, let's have a look. Let's go WTI. NASDAQ breaking bullish. Why do you think the NASDAQ's breaking bullish right now? NVIDIA. Everybody's got NVIDIA syndrome. Okay, WTI crude oil. What do we have here? Up day. Because my market profile is on the screen, I know exactly where it's thin. That is thin. When did that even start to develop? Right here, U.S. session. U.S. session's thin. Very, very thin. Why do you think it's thin today? We had EIA crude oil inventory reports out. Okay, that's one part of it. The other part is the Iran situation. Right now, crude oil is up about 0.33% on the day. That's not a trend day. However, U.S. session is very much a bullish day, very much. Take a look at where your POC is. Your POC is down here at about 80.25. I would love to take that trade. You're not going to get it today. You're trading 82.65, right? Look at what's developing here, though. Let's say we trade up in this area for a while longer. Then you're going to have that B formation I love, where you'd be looking to sell, lock in at the top, and play that back down to value. The only reason I can see these things is because of the way that the profile lays it out for me. So that's a very, very sophisticated question writing. I don't disagree. If you find that the VRVP or other volume profile indicators better to declutter. For me, this is easier because I recognize the patterns. Let's do something else fun here. We can look at the NASDAQ. This right here, though, how would you trade WTI crude rest of the day? I'm not really too interested in it. I feel like this is fake. Very, very thin here. So the idea would be, what would really fake the novice trader out would be something like this. You'd say, okay, I want to buy retracements down around 82.11, something like that. I don't have a problem with it. It's just very thin in here. Is anybody home? I don't know that. So this would be a really tough one to trade. Realistically, the play probably be to go short, stop yourself out up over the high. That probably would be the play. A lot of intraday traders are doing just that. The idea being that you're going to fill this void in down here and maybe trade down towards that POC in the next 18 hours. There's a lot of traders doing that right now. I don't have a problem with that either. It's all about how you want to see it in the charts. The TPO representation helps me see it right away without having to worry about really anything. All right, let's cursor back over to the E-mini Dow. Let's see if we can find a trade here. It doesn't look like our E-mini S&P 500 trade is going to cooperate. All right, E-mini Dow is a little bit different, right? This is almost that B formation that I was telling you about. You'll notice we talk a lot about letters with TPO. Sort of a value area here and a value area here and a little void here. When this is the case, typically you play the break to fill that void in. It's not a really good one, though. What you want to see is a lot, really sort of a long chain right there in a bunch of price points that have sort of been neglected. That's what you want to see. So how could we trade this one? Honestly, you're down about 0.20% on the Dow, off about 100 points. what would the trade look like? We could build a U.S. session range and we could use our Fibonacci overlay and maybe sell the bottom of value. I'm just not really interested in it. I think, if anything, this would be a day where you probably would have taken a position low on this hammer right here. Why? Why would we do something like that? Well, you could take the bid down here and play a return back up into this value area in the POC. And the reason why you would consider doing that is because it's not a trend day. It's not. I mean, there's no real way you say, oh, but Shain, it's way down in the U.S. session. And I go, not really. I mean, let's be brutally honest with what's going on here. You're only off about 0.25%. So, who cares, I guess? It's not, you're not down 3 or 4% right now. You're down 0.25%. It's a rotational day. Right now, you are rotating outside of value, which was established early in the session. Add it all up. What is it? It's a low volume day. There's not a ton of volume in there today. Why? Why? I think NVIDIA is a part of it. Even for the Dow, everybody's playing the NVIDIA game. So let's go back over to the NQ. What's going on in the NQ? Broke above value. Why would you break above value today if you're the NASDAQ while the other two indices haven't? NVIDIA. The hype is real, guys. The hype is real. So you're going to see something like this. What would I want to do with the NASDAQ? I would love to buy the POC. Absolutely. You could take maybe the daily range, something like this. Sort of there's your New York low, believe it or not. Opening bell, ding, ding. New York low. You're still trading inside of that first hour of action. Do you want to be long or short? It's rotational. I'd love to buy the POC there. We could go current wave, current spike to spike, doing something like this. Spike low, spike high. Maybe something right in here. Maybe. That's if you get a chance at it. I doubt you will today. This is very, very flat. Very flat. All right, we're going to have to open up our game and see if we can find a market that's going to cooperate. Even the S&P 500 has just not done the trick. Our high right there on this 30-minute bar is 76.90, 75. We're up there at about 76.92, very close. We were only about, 3 ticks away from getting filled. Welcome to TPO trading. All right, let's go in on the prowl on some different futures contracts that maybe we haven't looked at. Let's go HG. Let's look at some copper, some COMEX copper. What are we trading? I'm not overly familiar with this product, but I will show you how to find it. So the way that you find a futures contract to trade is you go right here and you look for volumes. So let's go to quotes. Copper futures quote. Okay, right there. You're always looking to trade the front month where the volume is. So right now, copper's down about 2%. All right, this might be fun. 30,000 contracts on SEPI, 42,000 on DEES. Very, very good spread, good split, volume split between September and December. Let's go ahead and pull up the December contract. Okay, this will give us a decent idea of what's going on. Take a look at that TPO. Overnight, that would be your initial balance. Remember that concept? Initial balance? There was your initial balance during the overnight. Came into the U.S. session, exploded to the downside. Now what do you have? You're trading the point of control right now. Let's pull it up. Let's go ahead, order. Give me a market order sell. We want 2 contracts. It is a Wednesday, and let's go ahead and sell it. Okay, why am I selling it right now? Right at the POC. Right at the POC. Down day, copper's off about 2%. We went ahead and we sold it. Now our market order was not great. Look where we got filled. We got filled down there. Why did we get filled that low? The reason why is because there's very little volume in there right now. Very, very tight. Not tight, but there isn't much participation. So we took this sell. Why did we sell it? We sold the U.S. session POC. We're testing the POC right here. We're on a big down day. So we sold to join the pressure. Okay, is the pressure still there? Maybe it is, maybe it isn't. Right now, the liquidity is not where it needs to be. This is sort of a tougher trade just because we're dealing with actually a bit of a spread here on your futures contracts, which is not good. And our fill was garbage. So if our fill was garbage, we should be short from right in there somewhere. That's okay. We're short from down here about 3 or 4 ticks beneath where we need to be. So we took the short. How do we manage it now? Okay, we've got to make sure that this is worth some money to us. So let's go ahead, maybe put something down there about 200 bucks, something like that. How can we manage this in real time? Number one, we got to watch price action. Now, this is hard. This is really hard, and the reason why it's hard is because the market is very thin. I would much rather be executing something on the E-mini S&P 500. I really would, because there's more volume in there. So right now, we took this trade to go with the pressure of the day. Does that mean that we're going to be successful? Not necessarily. Okay, the market's broke up against us. Let's go down to our 1-minute chart and see exactly what's happening. So right in here, the market's starting to really break out against us. We've got to start looking for the door. The POC right here hasn't been overly effective. Let's go ahead and mark our POC on our chart. Right now, we're above the POC, and we're starting to drive back towards what we would call that overnight value area, right? So you've got to exit this trade relatively soon. You really do. You can't sit here forever unless that loss could get really bad. However, you did sell with the pressure, and we're just not that far away from the POC. We're looking for rotation down here. We're looking for a little bit of rotation. So what can we do? Go to our 1 minute. Take a look at what's happening. This is not good. Right there was a nice strike on your POC. You came down, you got a few ticks, and then you rotated higher, tested that level, and then you broke. Why did you break? You broke because you got a flood of volume, 33 contracts in 1 minute. What's happened to the volume now? The volume's really dried up. You've only traded, 8 contracts in the last 30 seconds. It's incredibly thin. Very difficult to make any sort of price action decisions. We're sort of at the subject of the next guy that throws a block order down, right? We're down 175. It's not really right to pull the plug right now. Nothing's really happened. We took a bit of a hit right here with the volume. This was a decent volume split here, decent volume split here, a little bit of volume here, a little bit of volume here. You've also got volume dilution, remember, between these contracts, between September and December. So it's not ideal trading conditions by any stretch, but we're still in the trade. Market's coming back down. Okay, we're right back down to that POC. Where does our protection need to go right now? How do we manage it? Where do we have to get out at? We need to protect it. How do we protect it? 5, 4, 3, 2, 1. We've got to throw a stop loss down. Stop loss is what? Stop loss probably got to be right up in here somewhere above this swing high. Swing high at top right there is 6.7050. I'm going to go ahead and pad that by a couple ticks just so we don't get stop hunted out. And I've also got to adjust my profit target to at least respect the 1-to-1 risk versus reward. Right now, this trade is extremely tight, and we could be in trouble. Realistically, more than likely, we're going to get stopped out. However, the last thing I want to do in a market this slow with this little volume, the last thing that I want to do is get stuck holding the bag if this copper market makes a move back towards its value area that was developed in the overnight. This is not a situation where we sell it and we hold it and we hope for the best. We're not doing that. We are going to cut this thing off because if it does creep higher, we're going to get in trouble. This is one of those that you'll hold on to it, you'll let it sit there, and it'll just sort of creep against you. And then 2 hours down the line, you're going, Jesus, what the hell happened? I'm down $2,000. We make decisions quick and we get out. That right there is our protection. Now, it doesn't look good. It looks like we're going to get stopped out. Volumes extremely low. Not very good trading. You saw that hammer show up. Looks like we're going to get stopped right now. Very choppy, right around the point of control, which we should expect. I could loosen this trade way up, and we could just take a position and bet that we rotate down to the short. To me, not worth it. Not worth it. Is our opportunity to win here pretty good? It's pretty good. Was our entry good? Not really. You can see where we got filled with respect to the point of control. It wasn't very good. 6701. Point of control was 67025. The reason why we were filled there is we used a market order. Bad idea. Bad idea. You don't typically get a good price, especially in a thin market like copper. But what could happen now? What's the worst that can happen to us? We lose the trade. We lose 250. We come back hunting tomorrow, hunting later today. It's not a deal breaker. Now, money management. What I always say is 1 to 3% on any given trade. I'll let you trade upwards of 5 to 7%. I know if you're a retail trader, you're going to need to try to make some money. Very hard with a $5,000 account to make money trading 1%. It really is hard. So if you're a small cap trader, 5%, you're just not going to be able to miss as much as a large cap trader. That's all. In a perfect world, I would love each one of you to have $250,000 in your trading account where you could sit here and legitimately trade 1% trades and make a living doing it. I would love that. That would make my job incredibly easy. Unfortunately, that's not the reality of where we live. We're going to get stopped out right here, but that's not where we live. We've got to figure out a way to parlay our returns into big returns. And the only way to do that is to start small, grow your account, and get bigger and bigger and bigger over time. That's called compounded returns. This right here, though, we're going to take this loss, more than likely. I'm not going to feel real good about it. I still think this thing's probably going to rotate down and pay us off. But right here, we're going to take this loss, and that's life. That's the way it is. What did we do? Market order on the POC. Did we miss our opportunity? Yeah. Right there, if we get a sweet fill there right at the POC, and then it comes down a little bit, your low right there is 67. We'll have a pretty good chance. Barring somebody just coming in and sweeping price lower, we're going to get nailed. There's an old saying called mission creep. Mission creep, it's a military term, and that's when you get into a trade, not a trade, but you get into an incursion, a military action, and all of a sudden, 6 months in or 9 months in, you're doing something completely different than what you intended to do. I would call a slow trade like this would be trade creep, because this is one of those where if you do not cut this thing off, it will creep against you, and the loss could get significantly worse than anything you can imagine. Slow markets have a way of doing that to traders. They're very hard to trade. I mean, are you bored yet? I'm bored. I'm watching people drop off the stream by the second. However, God, give me a boring business. Okay, now, as of right now, I love our stop-loss location. I love it. This market breaks up from this POC, we're going to get swept out, and that's fine. However, our stop-loss location, pretty damn skippy. Pretty good. We've withstood how many tests up here? 1, 2, 3. Now, we may get stopped out, and that's fine. We're playing extremely tight. But we gave this thing every opportunity to succeed, and that's all I want to do. Give these trades a chance to succeed. That's what TPO is all about. That's what trading's all about. Price, maybe we break beneath the TPO. We're going right on that 2 p.m. hour. In the East, typically we see a flood of volume right around there. This copper trade to the shorts like pulling teeth. Couple options right now. We could pull the plug on it. Take the small loss. We could do that. Should we do that? Save you money. Instead of losing 250, we could only lose 100. Call it a dud. Or you can let it roll. Let it spin, as I like to say. Let it spin. We're going to let it spin. We've already got our stop loss down. We've taken heat twice. If they do come in and sweep this thing lower in about 4 minutes, we'll get paid off. It's that simple. If not, we'll lose. Buy the ticket, take the ride, guys. Buy the ticket, take the ride. Okay, let's cursor over to the E-mini S&P 500. I'm bored out of my mind watching that copper. All right, so this right here is actually coming into range for us. I would love to take this trade. You'll notice the POC, point of control did move north on us. That happens a lot. The point of controls do move. We've still got a pretty good trading opportunity right there at the top of value that I would very much love to take. And it looks like we're going to get it probably in the next 3 minutes. Let's go back over to our trade. Okay, now it's starting to break in our favor a little bit. Copper coming back down to break even. I still view the E-mini S&P 500 trade as being superior to this, but you're back down to break even. You have opportunities. You could get out right now and scratch it, or you could stick around and wait for the payoff. We're looking for about 66,960. Sellers are starting to dominate, get in control, but right at that point of control. I love that. This trade has done nothing but trade against us so far. It's done nothing but be negative, and now it's going positive. So now the psychology changes. Now, instead of just sitting there and going, okay, well, we're in trouble. I got my stop loss down. I'm going to let it run against me. Now, a lot of traders are going to be tempted to take the $50 and move on. And I'm not saying that it's wrong. You could potentially avoid a loss here, but we already took the draw, and our stop loss is down. Right now, we're at the mercy of the market, and it's not a good market. It's thin, and it's jumping all over the place. This is problematic for us in a lot of different ways. However, you already took the initial draw. If you cut that trade off at 50, you're setting yourself up to be a long-term loser. And the reason why is you're taking those big initial risks and taking small profits. You may be able to pat yourself on the back today and say, well, we took that and we avoided, that was a $300 swing. We avoided taking a loss. Yeah, but more times than not, when you take that initial big draw, you're going to get hit, and then you're not going to get paid off when the market actually does go in your favor. I highly recommend once you build your trade and once it's in, to leave it. So the way I would be looking to manage these things, point of control, if it hits your entry and it goes right down and gives you a stack of money right away without taking a draw, take the money. I don't have a problem with that. If it goes against you immediately and you have to set up your stop loss, then you've got to build your trade to be at least a 1-to-1, or else you're setting yourself up to be a long-term loser. It's not 100% true, because you could take, theoretically, small profits over time. I preach that a lot, only when the market comes your way, though, and only when price action develops the way that doesn't put you in a big draw position. But in trades like these, sometimes you just got to take your medicine. Didn't work. It's not working. Maybe it will work, but we're done guessing. Our trade's built, it's down, and it's going to stay there. All right, let me see. A stop loss to break even, Eli. Nah, I mean, it's a good idea. And a lot of traders do that, and pretty much everybody on YouTube waits for it to go. They move the stop to break even. They go, okay, it's a risk-free trade. Yeah, but back here you didn't have that you didn't have that luxury when we were down $200. You couldn't get out. You couldn't get out. You were caught holding the bag. You were stuck. Right now, price action below the POC, coming up on that 2 o'clock hour. Okay, it just went 2 o'clock in the East Coast. We should see a flood of volume. I would be surprised if we don't get the E-mini S&P trade right now. And this, theoretically, could be a very good trading day. It could be a scratch trading day, It's one of those deals. E-mini S&P trading about 76.88. Not horrible. Copper doesn't really feel like doing much of anything. I don't know how much longer I'm going to monitor this. It's putting me to sleep. Right here, okay, so this was sort of a bounce off your POC in the E-mini S&P 500. My trade's the same. We could adjust our entry point if we wanted to and put it right up on that value area. We could certainly do that. It's not a bad thing to do. I'm not going to do it. I just want to get in the trade right now. But if we get a chance there. Let's go ahead and take a look at our E-mini NASDAQ. What's going on in the NASDAQ? Bit of a pullback here. I would love to get a point of control buy, no question. I would take that trade in about 5 seconds flat. You can see the YM way beneath value. So NASDAQ's up. E-mini Dow is down. Let's take a look at WTI crude oil. WTI crude oil, you remember what I told you. That's sort of the anatomy of the trade. There was the sell. A lot of traders are locked in with their stops above that high, and now you're rotating back down into this into this thin chain. That is sort of an according to Hoyle. That's an according to Hoyle situation for position traders that are essentially locked in at that top. Real thin chain, not much volume up here, locked in at the top, playing that back towards value of that TPO. It's exactly what they're doing. We're left out in the cold because we're not short. Don't really care to get long either. If it comes back down to like 80 or so, 80 and a quarter later today, maybe early tomorrow session, yeah. All right, looks like our copper trade's finally going to break against us and get us out of there. Thank God, that's boring. Let's go right here to the GC. GC gold futures starting to see a little bit of a rally here, sort of metals coming off of those daily lows. Not a bad move towards the end of the session. You're going to see this rotation back up towards value more than likely. Or will the trend continue? It's not much of a trend. There's much more of a trend here in copper, but it looks to me like we're going to get whacked. All right, everybody, that is the TPO charts. That was our TPO presentation. I'll give this another minute and see if we can finally just get some closure on this trade. Go ahead and rip the Band-Aid off and take the loss. For me, that's fine. We've been in this thing forever, giving it every opportunity to succeed. I do like our stop-loss location, though. If it does get freight trained, odds are metals are going to trade, or at least copper is going to trade significantly higher today, which means it could be a really good stop out for us. Best trade we've made all week. Best trade we've made all week was cutting that gold trade off yesterday. No question about it. Now we're back above the POC. It looks to me like we're going to get whacked right here. That's okay. We gave this thing every opportunity to succeed. Stop loss right above that 30-minute bar, and we should take our medicine right now. Don't want to be in there anymore. I think it's time to go. High right there, 67.050. Yeah, we're just fine. We're going to leave that right where it is. If price goes down against us or in our favor, that's great. If it stops us out, that's fine. With the market this thin, my guess is we're going to get whacked. Whack, 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 right? All right, well, nothing's happening in price. I'll keep an eye on it. If we get slapped here, I'll get back on over to that. And if not, I'll update. No, come on, one more tick. Let's get the stop. Stop us out. So what do we see? We saw the metal markets base. Remember that POC we essentially sold down near the bottom of the day. Didn't really bother me because we were scalping in sort of a real dead type of a situation on a downtrend. But the low liquidity, and honestly, you want to know what did us in right here? It's the volume split between September and Dece. 30,000 on September contracts, 42,000 on Dece. That is really just a thin market to be trading. You want big, deep, thick, robust markets. You don't want to be dealing with markets like that. Very, very difficult to trade, and price action means very little. 1 minute chart, you'll see exactly what I mean. Price is all over the place. It's all over the place. Got to hand it to our stop loss, though. That thing is stubborn. I mean, it is stubborn. That's for sure. All right, everybody, I'm going to go ahead and sign off for now. That is the TPO. That is the TPO, the time price operating chart market profile workshop. We covered pretty much everything that I'm looking at when I'm trading TPOs. We've had some pretty good success there trading those. I would much rather get our E-mini trade. Okay, there's our break, and we are officially out of the game. So we got stopped out, and we will go ahead and take that. That's exactly how you'd be looking to manage that, though. Could have got out here maybe for a few bucks. Not really worth it. Rotates against you, breaks up above the POC, and now this trade essentially, in my book, is over. So we'll book that. We'll have some performance metrics for you tomorrow. Still having a pretty good week. We'll pour it on Thursday, maybe make some trades Friday as well. Remember, Friday, we're going to have Kevin Warsh live for you at about 10 a.m. Eastern. We're going to have live coverage of that economic event. If you have any questions at all on time price offering or TPO charts or market profile, be sure to reach out to me over at howtotrade.com. You can send me a private message, say hi, tell me what you think about the workshop or the live streams. Either way, just say hi. It's really up to you. All right, our E-mini trade is still on the board. I don't think we're going to get it today. We could wait around for it. 76.88 and a quarter. We're looking to sell 92s. I really love selling the top of that value area. But for right now, it looks like metals are going to be off of their lows. WTI crude sort of selling off down into that real thin chain, 82.37. U.S. stocks flat on the day. Would have loved to have traded those indices, but we just didn't quite get an opportunity. Maybe tomorrow. Tomorrow's another day. Tuesday, Wednesday, Thursday is when we make our bones. Today was a negative day. Yesterday was a positive day. Monday was good. Tomorrow's going to be just fine. Remember, the key to all of this is money management and trade management, and the key to that is keeping your head. Don't get carried away on any one trade. Watch your leverage. Don't get overextended. Stay in this for the long haul and just keep learning. That's what it's all about. All right, everybody, I'm going to go ahead and sign off today. We're going to take a loss today. It's all right. You can't beat me for the week. That's what I always say. Every losing day, I said, don't worry. We're going to be fine Friday. That's the way you got to look at it, guys. Your best trades are always tomorrow. And remember, no matter what, we don't get overextended and we don't dwell on losers. We learn from them and we move on. Probably not the best entry. Probably not the best contract to be trading with the volume dilution. But we took the shot. We built the trade and we live with its outcome, win or lose. That's all there is to it. All right, guys, that's a wrap. Have a fantastic trading session as always. Trade the action well, and we'll talk soon. See ya. Traders all over the world are already using Switch Markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, Switch Markets, let's do this. When you're ready to trade, Switch Markets is waiting